all over social media and YouTube, you see titles or captions along the lines of something like, the dollar is going to collapse, the world is going to de-dollarize. So you see a lot of this fear going around. And in this narrative, it'll either be about hyperinflation, the BRIC nations, different currency becoming the reserve currency, or the financial system breaking entirely. These are the themes uh, to this de-dollarization theme that we're constantly seeing online. Well, I'm here to tell you that you're being played. The dollar isn't going anywhere. Now, this dollar collapse narrative, it's nothing new. This narrative has been alive since at least the 1960s, as far as I've seen, maybe even longer. How long has this narrative been wrong? Well, more than 60 years now. And oftentimes, the same people pushing these narratives are also what are called gold bugs, where they're doomsdayers, and so people like Peter Schiff. And their predictions of gold going to $10,000 an ounce or even $100,000 an ounce is consistently wrong. And oftentimes, these same people happen to be connected to precious metal companies. So now I want to show you guys the dollar index, sometimes referred to as the Dixie. And as you can see, overall, we've been where we were at the current evaluation of the dollar in the past. And so recently, China, they acquired some natural gas in their currency. And France, they said some derogatory commentary towards the dollar lately. But so what? Wealthy people have reserves worldwide in dollars, cash reserves. I can tell you, these guys have liquidity, and that's in dollars. And think of how many dollars are out in the world. Most of the world's elites have in their portfolios American stocks, and mainly in the S&P 500 index, which, by the way, there's a public trust for the S&P 500 you can buy shares of on this S&P 500. And what is it valued in? Well, that's valued in dollars. And so people think that the dollar's value is just a confidence sentiment on a particular country's currency around the world. With the dollar, it's much more than that, though. Don't be fooled. The dollar is the benchmark for spending power and net worth worldwide. We saw the dollar go up last year because starting in spring 2022, of course, we had things happening in Ukraine and rising interest rates. So markets pulled out of risk-on assets like tech stocks, and with rising rates, even sold assets like treasuries. And so within the rising rates starting to kick off and affect the money supply inflation, that began retracing, which had occurred in 2021. So then we had deflation. We've had that for almost a year now. And so this month's inflation print, it's at 4.7% inflation rate now. And as you can see on this chart, this is a month-on-month basis. Now, what the Fed has been saying for months is their target inflation to where they'll stop hiking rates is when they get to the 2% inflation rate. And so that could take some months still, at least. So when the Ukraine took off, of course, we had the sanctions and disruptions on trade with Europe and Eastern Europe, of course. So in that environment, we also had the Forex markets retreat from the euro. And a year later, the euro got to a point where it was oversold. And so when we have black swan events, big money, they're going to often liquidate out of risk on assets and pile into gold until things have settled down. Now, now I anticipate that, and you can monetize on that happening with a certain trade structure, but I digress. And so when drama fizzled out over there in Ukraine and we realized it wasn't World War IV, then the big money will sell that gold quickly, and they allocated the dollar into dollars, and sometimes they put those dollars into other asset classes, or even just the dollar index in itself. And so that's why you saw the gold prices trail off the rest of 2022. So let's go view the dollar in a 60,000 foot view higher than we've been even earlier just now. And so a lot of people just say, well, since the dollar went off the gold reserve, it's doomed to fail. And I disagree. There was a lot going on at that time where there was more utility in having the dollar backed by oil. The world in its entirety is completely dependent on energy. And that's not changing anytime soon. And since we developed the trade lines and facilitated the flow of energy in dollars, that gives us dominance in the currency wars still up to this point. And at that point, that bolstered the reserve currency status, of course. Now, with that context and breaking the misinformed doomsdayers narrative, here's another angle to look at all this. Because of how public the Federal Reserve is on monetary policy, more transparent than anywhere in the world, by the way, especially today, we're told months before a new move is implemented by the Fed. And unlike other countries, and let's use the BRICS countries, for example, like China, who the doomsdayers say their currency is going to take over the dollar, all energy will be traded in their currency. And we kind of got to draw back. Who's saying this narrative? Well, the countries who have been, warned there would be sanctions on, stuff that we've seen. So, of course, China is going to talk smack and bluff that the majority of the countries would actually hold their currency over the dollar. And so their currency is one of the worst ones to be holding onto as an investor. And the super rich in China, what are their holdings in? Well, it's not in Chinese stocks, it's not in Chinese currency either. And so portfolio managers around the world have always known the supposed Chinese GDP and other monetary metrics are not to be followed because of the inconsistency and deception going on. And so it's not going to be big enough to make a difference. And so do all countries fudge numbers on those things like GDP reports? Well, sure. Some more than others, though. And as bad as the alternative and even mainstream media thinks the Federal Reserve is, let's face it, it has the transparency of many facets of data that you can extrapolate yourself and stress test. And so the world does not trust China's monetary transparency. Even their quote unquote allies in the BRICS nations, are they holding on to their Chinese currency? No. And so even if China and Russia, let's say hypothetically, convinced other nations worldwide to trade in China's currency, so what? Let's look at a diagram. And so here is America's trading partners. And as you can see, it's quite a big world. And so the BRICS nations are irrelevant when you zoom out in a true macro sense. Now, we also have doomsdayers talking about how Saudi Arabia said they're open to trading in other currencies. But just realize that's just talk. And even if they did implement that, so what? Remember, those countries are nowhere near the size of the US economy, especially in the world foreign exchange reserves. Central banks hold 60% of its foreign exchange reserves in dollars. What do you think the international money laundering is denominated in? That's in dollars. That's not changing anytime soon. The Fed monetary policy still largely controls the world economy. You cannot ignore that fact. As the dollar began strengthening last year in 2022, foreign currency and treasury holdings began to sink by quite a bit. And in a rising dollar environment and higher interest rates happening at the same time, it makes bonds worldwide less profitable to hold. Now, I want to show another visualization to you guys. Who are the largest holders of US debt? Well, as you can see, countries here that are listed, by the way, there's a few that are in the BRICS nation, China and India, to name a couple, as you can see here in the red. Now, a lot of times people view nation states as a competitive landscape. And to some degree, sure, it is, but ultimately, the world is a global bank. And so it's not about, white hats or black hats, good guys versus bad guys. It's about financial outcomes for the world's elites. So there's many different factions of the elites. That could be a whole nother show. Now, realize from where things are at, after everything presented, it would take a long, drawn-out period of time for the dollar to actually collapse and lose its reserve currency status. And so, in conclusion, recently China acquired natural gas in their Chinese currency, and France said some derogatory commentary towards the dollar lately. But again, so what? So I hope that you can now use deductive reasoning and looking at these things through a top to bottom economic analysis instead of falling for some doomsdayer's speculation. And so I expect us to see another 25 basis point rate hike for interest rates in the next months, prints. And, we're going to see that going on for potentially some time. And, there are Fed rate future contracts that are traded, and we can use it as a barometer on monetary policy sometimes. And so right now, the market is pricing in about a 86% chance the Fed is going to continue rising interest rates. And so the market is smarter than you or any of these doomsdayers. Ignore the noise, see the patterns. And when I say the market is smarter than you or the doomsdayers, I'm saying that because largely the market is those who hold the equity. So now what we covered today will correlate to another presentation, which will be all about CBDC, the central bank digital currency that everyone's freaking out about. I'm going to again demonstrate how it may not be as it seems to you and why some high net worth individuals that I'm privy to aren't concerned about it at all. What do they know that no one else does? Could it be that they're privy to better information and know things you don't ahead of schedule? So we'll get into that. And if you haven't already, join my Telegram. It's Safe Haven, PMA. You can screenshot the QR code linked here to join my website. That's safe-haven.co.com. So until then, I will see everyone later.